Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Wednesday the 9th of December 2020. The time is 05:05 in the morning GMT London time. Asian session coming to a close, European session opening up, and our lunchtime in the UK will be the start of the US North American session. So let's have a look what was going on yesterday. So this was Tuesday, Tuesday the 8th. Tuesday the 8th, it's the 12th. So we had pound and yen on the negative, and euro and dollar on the positive side. The dollar, let's have a look, was plus 41, euro was plus 9, yen was minus 5, and the pound was minus 45. That gave us an opposed negative driver in the pound, opposed by the yen. The yen was the negative rock, the euro was the positive mover, and the dollar was the positive secondary driver. And that was on activity of plus or minus 50. Okay, now let's have a look what was happening so far this week. So start a bit lower. So far this week then. So far this week we've had the pound on the negative on its own, euro, yen, dollar on the positive. Right, so this is Monday the 7th of the 12th, open to about 20 minutes ago or so. Right, so the figures are minus 81 for the pound, euro plus 9, yen plus 27, and dollar plus 45. So we've got an unopposed negative driver in the pound. We've got a positive rock in the euro, positive mover in the yen, and a positive secondary driver in the dollar. Right, so let's just quickly look at what's happening today so far, and then we can talk about it. So today, which is Wednesday the 9th, so that's open to about 20 minutes ago. We've got dollar and yen on the negative, and pound and euro on the positive. Euro was plus 47, pound was plus 39, yen minus 36, and the dollar minus 50. So that gives us an opposed negative driver in the dollar, a negative rock in the yen, a positive mover in the pound, and a positive secondary driver in the euro. And that was activity of plus or minus 86. Right. So let's make some sense of that then. So now, anybody trading yesterday, you know, in a sort of default stop take profit basis will have found life very tough. The markets were not playing nicely at all. These were the flows. So we had a negative opposed driver in the pound. So we had positive flows going the other way, predominantly into the dollar. And if you look, the euro and the yen were fairly static in terms of complex flows, +9 and -5. So the action was in the pound and the dollar. So the pound on the up and the dollar, the pound on the down and the dollar on the up. So you had that situation, and you had activity of ±50. But as I said before, this is the open to close activity, which is yesterday would have been very deceptive, because if you look at any daily chart for these major pairs, you'll see big long tails, sort of angry tails really, and the market was charging up and down like a mad thing really yesterday. And as I say, if you were using standard risk management, you probably got pretty much chopped up. But that's another issue. So what's happened so far this week? Well, interestingly, we now have an unopposed negative driver in the pound. So far this week, basically, people have been getting out of the pound, and where are we now? Wednesday morning. And the opposing positive flows have been going into the dollar mainly, the yen next, and the euro. So if you remember, if you get an unopposed driver, in this case a negative driver, it actually tells you one of two things. It tells you either that we're near like a local floor in this case. So in other words, this is the bottom for the pound, or could be. So once it's sort of you got the lag out the system, then the pound is starting to bottom out, or it can be the start of positioning for a further down move. Okay, so they're the two options which we'll discuss in a minute. Now, so far today, we've got fairly balanced flows, but we've got flows coming out of the dollar, and the opposing positive flows going into the euro and the pound, and the yen being the negative rock. So that's where we are. What's going to knock us around today, apart from the obvious Brexit stuff? Well, what have we got? We've got the CAD's rate decision. So that's one thing. Tomorrow, Tomorrow we've got the euro rates decision, which I've been sort of talking about this week really. And Friday we've got German CPI, which is another euro issue, and the US Michigan consumer sentiment. Now, interestingly, next week, if you just look a little bit over the horizon, Wednesday, what is it? Wednesday the 16th, we've got the Fed's rate decision. So that's a significant event coming on the radar now for next week. So let's put all this into context then. Right, make some space. Get off the fence. Now, the Brexit noise has been sort of arguably semi-positive. It's been wrapped in negativity, but it's been semi-positive. And yet we've seen, yesterday we saw a sell-off in the pound effectively, and we've seen the pound being the unopposed negative driver so far this week. And yet so far today, the pound's now starting to recover a little bit. It's the positive mover. Excuse me. So that's one issue. Now, so if we start with the pound complex, come back to this situation here. being so far this week it's the unopposed negative driver. Well, we're obviously going to get wild volatility in the pattern because we're coming to a head and it's like a major market event. But this to us, the mood music and all the general scenario looks to us like this is likely to be the start of a further negativity in the pattern. I think we're going to have our hopes dashed on a nice agreement at the last minute. We believe that to be the case. So let's give the pound a neutral to a drop in terms of complex. Right, now what else has been happening? The American stimulus deal has been rejected, which now that has tended to give the pound a little bit of a boost. Sorry, the dollar a little bit of a boost, and so far this week the dollar has been sort of the positive secondary driver. So people have been starting to come into the dollar, but you can see that today they're coming out of the dollar. So that's something to bear in mind. Now the yen, which has a lot of equity bearing and bias in it, the equities obviously the stimulus deal in the US are sort of linked. But if you look at, we believe if you look at the equity scenario, that then equities are going to be pumped this week at least, because we've got, as I said, on Wednesday the 16th we've got this Fed meeting. Now they've got a sort of a window of opportunity in equities. So we believe that equities, and if you look at the sort of technical setup, they do look like they're going to pump higher. So the S&P 500, Nasdaq, Dow, etc. So that being the case, the yen is likely to get weaker on equity transmissions. So if you've got a stance of a pound neutral to down and yen down, then you've only got two complexes left. You've got the euro and the dollar. Brain froze there a minute. So right, so you've got the euro and the dollar, and what's been happening? So the euro, whilst it's attracting positive flows at the moment, the euro has been the positive rock here, and yesterday the euro wasn't really benefiting from all this pound negativity. Basically, it could hardly get off the floor really. So, and bearing in mind tomorrow we've got the rates decision for the EUR, and we've got well, the key thing is that the German data seems to be punching quite nicely, whereas the EUR data seems to be a little bit neutral to soft. So and we know that Germany is quite a driving force in the EUR. But that aside, the overall situation to us suggests that running into the European the EUR rates decision tomorrow and going forward, bearing in mind that the euro complex has been pumped, and we've got falling pound and yen, then you're gonna see potentially positive flows go into the euro and the euro and the dollar complexes. So and it's quite messy, to be honest, and it's really just a case of are the positive flows into the dollar going to outgun the positive flows potentially into the euro? And we believe they are, because so for us the euro dollar pair, which we suggest to go short, is going to maybe get one unit of upward input, whereas the dollar is going to get two. Now, and the euro complex has been pumped much higher, and the likelihood is if we get a moody sort of Brexit situation with shares pumping, you could get a dollar situation which is going to be conflicted, obviously, because normally you get weakness in the dollar, but it's conflicted. But on balance, we think that shorting the euro dollar, so short again, stay short euro dollar as we run into the EUR rates decision is the way to go. It's messy, it's uncertain, and the markets are trading very nastily for most people. So just be aware, but we're going to stick euro dollar short. So I hope that helped. See you tomorrow.